I'm Alison Southwick with the Motley Fool. Thanks for joining us for this week's Tech in Review. I'm joined by Lyons George. He is an analyst at the Motley Fool, and Eric Bleeker, who is also a tech analyst here at the Motley Fool. So
Convenient.
Convenient.
There you go.
Easy. So first up, everyone loves a little Apple rumors, little Apple iPhone rumors, and so the latest one is that the fingerprint sensor, which was supposed to be in the latest iPhone 5S, is now delayed, as well as a little thing called liquid metal, and I'm going to be the first to mention Terminator, so you guys can't.
I was going to say, I believe that technology comes directly from the Terminator series.
This will be about 90% of the segment. But
Terminator references.
yeah,
So-
I mean, with Apple, obviously, it's a year between products, so we have to entertain ourselves with rumors in between. And iPhone 5S, everyone's talking about what features it might have. Two of the reports were they purchased a company called Authentech, which does fingerprint. Basically, your home button would have a fingerprint sensor.
Biometric
authentication
The
data.
future is
There we
here.
go. The Terminator over here knows the term.
Right.
So anyways, it was that they would have that, but there might be delays on it, which could limit the production of the phone, the iPhone 5S. And the other kind of rumor that we've been seeing a lot of that's out of left field is liquid metal, which, beyond being a Terminator reference, is also a new technology. It's a company that Apple has exclusive agreement through 2014 with. And where this comes from is a website, Boy Genius Report, which is a very popular website, even though it doesn't sound as reputable as the Wall Street Journal. And they say they have some components, parts from the iPhone 5S, and that the SIM tray is using liquid metal. In response to this report, liquid metal shares shot up 223% yesterday, which, small company, but obviously a pretty big boom. Why I would throw some caution behind these reports. Number one, they just purchased Authentech a year ago. Kind of rushing to market in that time frame is very difficult. The scale of mass producing an iPhone is incredible, and that's why it's often hard to do new technologies on it. Same goes for liquid metal. Last year, the inventor of it said in an interview it was still 2 to 3 years away. Unless we're in a Terminator-style time portal, we have not gone 2 to 3 years. And Apple also used liquid metal for a very small piece, the SIM ejector, in the iPhone 5. So maybe they're just using it in another small piece. Doesn't mean it's going to create an indestructible frame in this next generation. So a couple points of caution on these rumors, but still everyone's going to be looking at, hey, what's new in the iPhone 5S? Because we had Siri in the iPhone 4S and we had Maps in iPhone 5. So it's kind of expected with this mid-generation they'll have some kind of feature. But if you're an investor, I wouldn't read too much into these because they're still both relatively immature technologies.
Right, now just to play the devil's advocate here though, a worst case scenario, if you are going to indulge your inner rumor monger, is that Apple is trying to bake in full finger sensor security into the iPhone 5S, and the production is being gummed up by their component suppliers, and so 3 or 4 million phones that were supposed to come out in September, which would be the normal time for Apple to release a new iteration of the phone, is going to be pushed back a couple extra months. Apple's already at a pretty low price to earnings ratio, already somewhat of a value player. Value investors are looking at it. So any sort of miss in terms of getting a new product to market can maybe push it down a little further. So if you own shares, something to consider. And if you're looking to buy some, that's also something to consider.
Yeah, and I think a more clear and present thing too is there's been a lot of reports on the iPad mini, the next release, actually being delayed into early 2014. Those seem a little bit more credible. We've seen more reports. So that's something I'll be on the lookout for. And as tablets, and we'll talk about this more later, are increasingly hitting lower price points, and the iPad mini has in many ways becoming the de facto iPad. That's somewhat concerning for me.
All right, so next up, Microsoft has now released a $350 Surface. It was at $500. So I imagine that as soon as you guys got this news, you freaked out, you ran down to the Microsoft store and immediately got in line, right?
I did, but they were sold out for months.
But I couldn't find a Microsoft store.
No, I mean, we're looking at this. When the Surface came out, I'd actually written an article saying Microsoft's not doing its partners any favors because it wasn't cheap enough to spur mass adoption of the tablet because they want to leave room for their OEMs, their partners, to be able to sell Windows RT tablets and still make a profit on it. So they went for this compromise saying, we're going to sell at a level where we can still get partners engaged in the chain, but it wasn't cheap enough to spur adoption. So the results were middling, as we've seen, selling less than 1 million units in a quarter when many competitors are selling. For Apple, beyond 10 million, and for Google tablets, several million. So I think what we need to look at here is, as they're going down to $350, now they put the risk in the different area, right? That at $350, there's not a lot of room for their partners. And remember, partners, too, dealing with Windows, have an added cost layer. You see Android tablets coming down to $140 or so. HP has a new one, which, again, we'll discuss later. But you have to pay for the Windows license. So inherently, you can't hit that cheaper price point. Microsoft reducing their Surface, to me, it just shows more problems for Surface RT in total. This is something that they wanted to break out of the Wintel, the traditional Microsoft Intel. RT tablets allow chips from Qualcomm and NVIDIA, but what's happened is they don't have that same back app catalog. Most people just prefer if you can get Surface for $500, well, previously, and then you have to throw on your keyboard and you're over $600. Why not just go out and you can buy a very capable Ultrabook for $600, running your traditional Windows that you can run all of your old programs. It's had Office and everything from the start, and email exchange. So, for me, I just think that this is a continuation of RT that is below expectations. And even though they might be able to move some more Surfaces, it's going to spell trouble with their partners who they need to move this in volume.
I would just say more broadly, I think the tablet market, much like the smartphone market, is going to become a race to the bottom. I mean, we're seeing, over in, I think an analogous market would be the smartphone industry, right? Where the first smartphones were, I guess you go all the way back to the Palm Pilot, and that's a pretty premium product. And then BlackBerry is the smartphone of businessmen. And then, the iPhone comes out, and it's sort of this very premium, consumer-facing smartphone, and then all of a sudden everyone wants a smartphone. There's all these foreign competitors who are introducing sort of copycat phones into the market. Now you have Huawei over in China putting smartphones out for I think under $100. I think in the long term that's where the tablet market is going. So if you're interested in sort of investing in a smartphone manufacturer, you better be looking. There better be some sort of serious differentiating factor. I would say Amazon with the tablets. That's why that's interesting to me, because they're trying so hard to build out that content and sort of one-click purchasing capability with their tablet line. But I wouldn't be surprised if Windows tablets go down even further in the coming years.
All right, so if $350 wasn't cheap enough for a tablet, you can buy a $2,000 plane ticket, head over to China, and buy a tablet for $50.
$50.
$50. All right, So how are they doing it?
Yeah, and this actually plays off what we were just discussing with tablets. People are going to see explosive growth rates. And right now in the smartphone industry, you're seeing still explosive growth, going to grow 23% volume terms this year to about 837 million smartphones sold. Yet every company which sells smartphones is down right now. Apple below 10p, Samsung below 10p. These are companies investors aren't paying for. We're seeing the same process playing out with tablets, as Lyons had just mentioned. And where you see this is China, where we are looking at $50 tablets. How are they doing this? Well, it's pretty surprising. Processors, let's say an NVIDIA Tegra processor, this can cost $20 to $25 for a top-of-the-line quad-core processor. We now have some of these, smaller Chinese companies building them for as cheap as $8 or $10. And, you go for less sophisticated designs, even less. So good enough is able to do it for a third the price. And areas like memory, this is very ironic. They are salvaging old PC memory to put in tablets.
Oh, wow.
Kind of a statement of the times.
It's called upcycling, I believe is the
So, just the takeaway here is this is bad news for tablet manufacturers and for investors looking to make money from tablets. What you have to look at, Android's not going to be able to benefit much from this trend. These low-end tablets are using a variation of Android, but Google's essentially stripped out of it. It's bad for companies like HP. HP just came out with a $140 tablet using one of these Chinese processors. But here's the problem. They're getting into this game so late, once the margins have all been stripped away. This process will just continue to play out. Right now, we're blown away by $150, $200 tablets. hey, it's just going to continue getting cheaper. I also think that's bad news for Amazon in many ways because they have tried differentiating their platform, but I think a lot of people still were drawn to the Kindle because it came in at a very low price point. If your price point's not special anymore, that takes away a point of differentiation. And of course, we need to talk about Apple on this because as low as Apple goes, and I don't see them going much lower in the future.
No $50 Apple tablet.
No $50 Apple tablet. $330. Apple has the highest point of differentiation, but what investors need to be aware of is if you see a tablet forecast for volume, you can't move Apple's share along with that because if they're all selling for $50, Apple has no piece of that market and they have no interest being involved in that market. So if you're an investor in tablets, I think it's overall bad news. I think it's really bad news for an HP that's just getting in. I think it's bad news for an Amazon, which is going to have more trouble competing on price. And I think it's hard to see it as good news for Apple.
Yeah, and I would say, if you're an investor in tablets, maybe walk out through the front door and look for a side door into tablet smartphone connectivity. The increasing penetration rates around the world. I mean, one thing, so if there's going to be all these sort of copycat companies selling $50 tablets in China and there's no profit to be had investing in that manufacturing, then one thing you can bet on is a couple of internet companies that are going to benefit from just more people logging on more of the time in the world's most populous country. So a company like Baidu, which is a dominant search player over in China, or Alibaba, which is an e-commerce giant, which is theoretically about to go public. Almost certainly going to go public in the next year and a half, and do not quote me on that.
We're writing it down.
Yeah, quote him.
Exactly.
But that might be the shrewdest way to play that growth without having to deal with the sort of race to the bottom effects of the market right now.
All right. That's interesting stuff. Thanks.
Thank you.
I mean, that sounded like I was surprised to hear that from you. I'm not, but that was an interesting way to look at it.
Yeah,
Wow, good way to go. All right, so next up. Now, I don't remember the last time you guys bought a camera, but it was basically on your iPhone, right? And so the common thinking is that the standalone camera is dead. It's gone the way of the Dodo. Is this true?
Yeah, and actually this weekend I was on a vacation and I saw someone using a point-and-click camera. And it actually took me a couple minutes because it's been so long since you've seen them anecdotally. But then you look at the numbers. This comes from a MarketWatch article. IDC, a very trusted researcher, year over year, point-and-click camera sales off 26%.
Wow.
And that's after several years of declines in front. Now, where it becomes interesting is cameras as a whole aren't necessarily dying. It's just certain niches are performing worse or better. Cameras with detachable lenses, the SLRs, you see people zooming in, taking more professional photos, they were actually up 5% year over year. So it's interesting because you see on Flickr, the top cameras in terms of photos come up, all iPhones. You saw famously the Chicago Sun-Times get rid of their photography staff and tell reporters use iPhones to capture it.
Wild.
And yeah, that was a huge story. And what a lot of people will take away from it is, hey, cameras are dead. And smartphones are Swiss Army tools of the technology world. They do so much, they appify everything. But I think what investors need to look at with this, there are some opportunities from this because good enough stuff is dead. Point and click is dead. There is no way that any company involved with this is going to see growth from in coming years. However, what is interesting is niches of spaces. And you get people involved in photography as a hobby and everyone suddenly taking pictures wherever they go, and SLRs actually have some future to them. So it's just how investors need to look at disruption, and especially smartphone disruption, is that essentially any product that's not doing anything that you can't appify is going to be gone. But if it involves some kind of differentiation that smartphones won't be able to handle, actually could have a better future. It's hard finding ways to pure play invest in this, but if you can find those, they can potentially be very lucrative. One of these ways might be, some connected home stuff, a pure play connected home stereo system. I've seen connected key devices. It's just, we're going to have some investment opportunities in the years ahead along these lines. I think that's where investors, if you're looking at home electronics, should be tuned in.
Yeah, and I don't know, when was the last time you guys took a picture without adding an Instagram filter? Because pretty much every picture I take, I'm like, well, what filter do I want to make it look awesome? And I feel like the bar is raised for just how good my picture needs to look.
Are we filming this in Brooklyn right now?
Yeah.
No. Oh, come on. This is not a Brooklyn
I am not
thing.
an Instagram user, surprisingly. But
What about you?
I use it from time to time.
He's Instagramming this.
Right.
I am Instagramming it.
But one thing that's actually interesting from an investing standpoint, I think about I saw on Mary Meeker's newest internet report the explosion of just photos being uploaded to the internet on a monthly basis, growing at an incredible pace. And outside of the hardware, cameras, like sort of the death of legacy cameras being replaced by smartphones. I think there's going to be some very interesting plays in photographs, images as content online, and people sort of wag their finger at Facebook for paying $1 billion for Instagram. I imagine a future where you're on Facebook, you're looking at Instagram photos, you scroll over your friend's shirt, and you can double click on it and see what brand it is, and it'll give you a link to where you can buy that. So there's this very clear path to monetization from this explosion of uploaded photo content on the web. Anyway, that is completely theoretical, but that's also a thought for people who are interested in sort of this photo culture that's popping up around smartphones.
Interesting Instagram anecdote. You go to some markets, Kuwait, not exactly an emerging market. People are pretty wealthy there. They have oil. But there is an Instagram economy that's literally surfaced in Kuwait. And I read an article even about a sheep company that sells sheeps, and they do all their transactions through Instagram.
Wow.
So you find them to be able to purchase sheep. So the ultimate old world business
the
selling of sheep connected to one of the most advanced things. So I think some people, when this was done, $1 billion for a company with 13 employees, it's natural to go, what is Facebook thinking? But like you were talking about, lots of logical extensions in not just the actual devices used to take pictures, but photography and some interesting innovations around that.
You heard it here, guys. Buy your sheep off Instagram.
Buy your sheep off Instagram. Yeah, I look forward to Facebook monetizing millions of pictures of what people had for lunch. This is going to be really exciting stuff. All right, well, I think that's it for this time. Yeah, we're good?
We're good.
All right, wonderful. Well, on behalf of Lyons George and Eric Bleeker, thanks for joining us, and Fool on.